RBI గవర్నర్ మీడియాతో మాట్లాడుతున్నారు. ప్రస్తుతం ఆ లైవ్ చూద్దాం.
A further reduction in the policy rate since it takes rate increase off the table while committing to either rate reductions or status quo going forward. Furthermore, sufficient liquidity has been provided to the system, resulting in overnight money market rates trading below the policy rate throughout July and August so far. In today's meeting, the MPC judged that with inflation projected to remain within target, addressing growth concerns by boosting aggregate demand, especially private investment, assumes the highest priority at this juncture. Against the backdrop of policy actions taken so far, the MPC felt that it is prudent to remain accommodative. While remaining consistent with inflation mandate, the MPC considered it necessary to calibrate the size of the policy repo rate cut to the dynamics of the situation. Accordingly, the MPC was of the view that the standard 25 basis points might prove to be inadequate in view of the evolving global and domestic macroeconomic developments. On the other hand, reducing policy repo rate, say by 50 basis points, might be excessive, especially after taking into account the actions already undertaken by the RBI. Reducing the policy repo rate by 35 basis points was therefore viewed as a balanced level of cut under the circumstances. Now I shall turn to some of the developmental and regulatory policy measures that we have announced today in the areas of financial markets, payment and settlement systems, banking regulation, financial inclusion, and credit flow to NBFCs. As regards financial markets, the Reserve Bank has been making continuous efforts to develop the market for state development loans, SDLs, in both primary and secondary markets. In continuation of these efforts, it has been decided to introduce stripping or reconstitution facility of SDLs, that is state development loans, in consultation with the state governments. In order to enhance efficiency and soundness of the payment and settlement systems, several measures are proposed. First, the National Electronic Funds Transfer NEFT payment system operated by the Reserve Bank as a retail payment system will be made available on 24/7 basis from December 2019. This is expected to revolutionize the retail payment system of the country. Second, all categories of billers except prepaid recharges who provide for recurring bill payments will be permitted to participate in the Bharat Bill Payment System, BBPS, an interoperable platform for repetitive bill payments on a voluntary basis. Apart from digitization of cash-based bill payments, these segments would also benefit from the standardized bill payment experience of customers, centralized customer grievance redressal mechanism, prescribed customer grievance fee, and the like. Third, it has been decided to enable diversification of risk and encourage innovation and competition by offering on-tap authorization to entities desirous to function, operate, or provide platforms for Bharat Bill Payment Operating Unit, Trade Receivable Discounting System, that is the TRADES, and white label ATMs. Fourth, the Reserve Bank will also facilitate the creation of a central payment fraud registry for tracking payment system frauds. Participants in payment systems will be provided access to this registry for near real-time fraud monitoring. This aggregated fraud data will be published to disseminate information on the emerging risks. In the area of banking regulation, it has been decided to reduce the risk weight for consumer credit, including personal loans, but excluding credit card receivables, to 100% from 125% or higher. Over the last 1 year, the Reserve Bank has taken several measures to enhance credit flow to the non-banking financial companies, NBFC sector. Now, the details of these are, given in the Statement on Development and Regulatory Policies, which has been uploaded in our website, copies of which have also been shared with you.